Hello, traders. Welcome, and just give me a few minutes to allow more traders to join us in this stream. All right, so let's talk about the pound dollar. Tomorrow we have the decision on the interest rate by the Bank of England, and of course we have the announcement of the Bank of England's monetary policy. And actually, the markets are expecting a new round of easing and maybe a rate cut from the Bank of England. But to be honest, I really think that they're going to maintain it. Of course, we really don't know what's going to happen, but facing this or facing tomorrow's decision, the pound has hit some very interesting levels for me at least. But well, as you remember, after the Brexit, the pound depreciated enormously, going from the highs at around 150 to the lows at around what was it, 127, for a 2,230 pip decline. And right now we have gone up to some very interesting levels. So let me just zoom in on my chart again. And well, as you can see, this level was after the Brexit was tested a lot. And bulls kept it alive by pushing price up. As you can see, we did have some bears trying to break below it, but those spikes on these candles just tells us that they, well, one, they were not strong enough to, well, to clear with all those bulls or those buy orders, and this seems like a sign of exhaustion of the bear market. So in fact, we did came up, and we the first try was a nice 120 pip pop, and then we had a nice 230 pip pop before we broke with this level and well, retested it. Look at here. This is a very good example of a well, of a swipe candle. As you can see, this is a very strong move to the downside. Bears just just uh, cleared all those buy orders, and then price moved down. Then we retested the level with before moving lower again for 500 pips. Okay, now I hadn't well, I didn't take any trades after this move to the downside, where I took around let me see, I think I took around 120 pips when we broke with this continuation pattern. As you can see right here, just let me the configurations on my trend line. We did have had a continuation pattern on the pound right here, some sort of wedge or a bear flag, and we traded this bear flag for around 120 pips. And after that, we didn't touch the well, we didn't touch the pound dollar. But what we did actually is we kept waiting for the pound to hit these levels again. Now I think the color on this rectangle is just fine. Okay, so we did hit these levels again right here, but we needed to wait for a sign of a bear continuation, or well, to be more exact, a bear reversal at these levels. And the reason is that well, we don't we didn't actually know what was going to happen. Well, buyers could have actually just cleared this level, and price could have continued to move to the upside. So we like to trade with or when we have at least one set of confirmations that the level held, and now we can trade the trend or the breakout. Well, the first thing we did was to draw this a rising wedge. Okay, now this was a rising wedge that we drew, and of course we also use some Fibonacci levels on our charts. So what Fibonacci levels we hit these levels. So let's look at the default levels on our Fibonacci, and I really think that well, the 61.8 was clearly broken to the upside, so we are going to be using the 76.4, and we're going to see if the 76.4 is around these levels. Okay, and as you can see, well, the 76.4 is all the way up here. Now, we are also going to use another Fibonacci retracement level from this high to this low, which is the second leg of the move. And we're going to try to use the 88.6 to see if we have actually reached it, which will confirm that this is a very strong level too. Remember that Fibonacci levels well, are just tools to help you understand how strong a level really is, or well, not how strong a level really is, but what we can do actually with Fibonacci levels. And if we find Fibonacci clusters around these levels, is well, there's much more probability that we are going to find sellers here. Okay, so let's change the color because we are using two sets of Fibonacci right here, so we're going to use a long green. And as you can see, we do have well, we do have the 88.6 around these levels. Okay, now let me get rid of this rectangle. We're going to use only the levels. Okay, what we're going to do also is we're going to see if we have hit some Fibonacci expansions. The reason we need to see if we have hit some Fibonacci expansions is to see if buyers have hit their targets at these levels. Okay, so what we're going to do is we're going to see the Fibonacci expansion on this move. All right, and as you can see, we have hit the 213 Fibonacci expansion practically to the pip. So basically, this is a very strong level where we are, well, could find sellers because of the test that we went through at the beginning of the presentation. And not only that, but we have also hit targets, which means that buyers are going to close their positions around these levels, which means that this is going to bring more bearish pressure to well, to the pound here. Remember that these are only technicals, and well, right now we are in the money for around if I'm not mistaken, 50 pips or so, 60 pips, but our targets are all the way down here for 197 pips. Okay, we are going to move our targets up a little bit, and let me talk about our targets. And remember that if you're not in the trade, if you're not a subscriber to our services or signal services, try not to chase this move because you might regret it. Okay, because just imagine that you take a short trade right here and the pound decides to well, to retest these levels again. Well, that means that you are going to be in a losing trade for around 100 pips. So don't chase the markets. If you didn't get our entry, well, that's too bad. Just subscribe to our services if you want to. Well, let's talk about our targets here. First of all, let's draw a Fibonacci retracement level from this high. I'm sorry, from this low to this high. And let's talk about the default levels. And as you can see, we do have the 61.8 just around the level of support that we have pointed out. Now, the reason we have pointed out, I'm sorry, let me just delete all the levels that we are not going to be using because it clutters the chart too much. Now, the level that I have pointed out is this one because, first of all, right here, you can see that after this enormous push to the downside, we did encounter some buyers. And then when we broke, we retested the level. Then once again, right here. And then we had a very nice absorption candle, bullish absorption candle, well, absorbing all of these sell orders. All right. And of course, a retest before moving higher. So this is a very strong level that we are going to be targeting. Not only that, this is the 61.8, or we are around the 61.8. And if you look closely, we do have this, well, this bearish channel that we were trading in. And right here is where we broke with this bearish channel. And it's very plausible that price is going to come down and retest the break of this channel and the break of this support at the same time. So what we're going to do is we're going to move our stops a little high. I'm sorry, our targets a little higher, because we really want to get filled on our trade, on our short position, which is looking very good right now. But basically, this is what we're going to be doing. And before the Bank of England tomorrow, we are definitely going to see if, well, we are definitely going to take profits on it, on this position. And basically, if we are around these levels, okay, which will mean that if we are around up 100 pips or so. Let me see if this is 100 pips. I think it is. It's 120 pips. If we are around these levels, we are going to close 2/3 of our trade, put our stops to break even, and let the rest of it ride. Ride. I'm sorry. So basically, this is our plan. And if we are going to let the rest of it ride, then we are going to take out or take profit targets, because one, we are going to be taking profit on 2/3 of our trades before the announcement. And if the announcement is favorable to our position, then we do want to let the trade ride, because it might be very possible that we are going to be breaking with the levels around the 128.47. So basically, this is what we're going to be doing, uh, or that is our plan on the GBP yen. And now let me see if we have some questions on the chat. And apparently, we do not have any questions on the chat, which is fine. And what we're going to do is, well, we're going to leave it right here. And well, we are going to come back tomorrow to see how this position has developed. What we're going to do, I'm sorry about that. What our plans are going to be. And well, our plan, we already know where our plan is going to be, but how we're going to follow our plan. And of course, the when the news is released, we are going to try to be live to see the reaction of the market. Now, another announcement that we have is that we are going to be conducting a live trade room every day for 2 hours before the New York Open. This is free to attend to all traders. You don't have to be a subscriber to snipe the trade to attend. And basically, what we're going to do here is we're going to analyze the markets. We're going to see what to expect. We're going to see some bull and bear levels, some bull invalidation levels, bear invalidation levels, and basically we're going to share some charts. So if you want to get notified when we are going to go live, just subscribe to our YouTube channel and you will get notified. So until next, I'm Orlando Gutierrez for Snyder Trade.